Is it a struggle? Yes, we have to realize our strengths and our weaknesses. Hi, and welcome to Why and Why Not with Janice, and I'm Janice. Tonight we're going to talk with Susan Pfeiffer again. She talked to us about a month or so ago about getting your finances together. Well, another important thing about getting your finance together is getting that credit together, which most people cringe on. But you can't do much without having good credit. I don't even know if they can let you get a library card anymore without good credit. They probably run your credit for that too. Can't even borrow a book without, having good credit. So Susan's going to give us the ins and outs and tips on getting good credit, where to pay off things and get your score higher, and just all the tips in the world that we definitely need, because some people at one point of time really needs to work on that. So welcome and thank you very much for coming again to the show, Susan.
Hi, Janice.
Hi.
Thank you for having me.
Hi.
Happy to be back.
Thank you for coming back, because people loved the last show about getting your finances together and really was helpful, the tips. So really want to talk to you about the next step. After we have our savings aside, get our credit together.
Yeah, so important. Very important. I think there's quite a bit of myths possibly out there, and I see a lot of common mistakes just because there is not enough education. So I would love to share some of those kind of mistakes that I see just to help people avoid things like that, and some tips. And so to start with some of the biggest mistakes I think I see, and the number one that I would have to say, so some people that have some established credit, and maybe they have a medical bill or something that slipped through the crack with insurance. Right. And it could even be that insurance was supposed to pay for it and cover it, and maybe the bill got sent to the wrong address or got sent and it was just missed, which is super common. Right. So then all of a sudden you end up with this collection on your credit. And that's where they basically have placed this collection, and it's saying that, let's just say it's for $250, it's gonna stay lingering on your credit report for, it can be up to 10 years, depending on what state you're in. But
10 years?
Yeah, it can stay on there for 10 years. Now, it depends on what kind of collection. Different things are going to last for different amounts of time. But that's definitely something scary that people don't know how to handle and what to do. Something that we see is they'll come in and they'll say, oh, I just paid off 5 collections that I had on my credit report, and now I'm ready to buy that house. And the problem with that is, once a collection goes on your credit score will drop. And it depends how much. It could be 20 points, it could be 60 points. It just depends on how much you have on your credit and how many collections, of course. So let's just say that you end up having surgery and you get a couple collections because, not just the hospital bill, but there's the separate bills from the doctor, the anesthesiologist, all the different labs and things like that. So if there were 3 or 4 different collections and you went and you just paid all those off, believe it or not, your score is going to go down lower.
For paying them off?
Yes.
Wow.
I know.
For paying them off, my credit's going to go lower?
Yes.
And then I don't pay them off, it's going lower.
Well, it already went lower, right?
Right.
So here's the thing about that. The best thing that you can do is reach out to those collection companies and try to negotiate with them. And it's really important to be educated, because a lot of times the people that are going to be answering the phones, they've got a simple script to follow, and their script is going to say something like, oh, well, we'll mark it paid as full, and that's all that we do. And unfortunately, that's really not true. They can actually remove it permanently from your credit report.
So just saying marking it that is paid isn't good enough?
It's not. That's going to lower your score.
Wow.
So even though you're doing the right thing.
Right, you want to do the right thing.
And you're trying to square up your bills. No, it's going to actually further lower your credit score.
Okay.
So if you the key is to come and talk to somebody if you need help before you get to that point of paying the collections, so that you know what some good scripts to follow. You can mail letters. I have a script that sometimes people like to verbalize it instead of mailing the letters. And it's important to call and talk to them before you just pay it. And if you ask them, see, your bargaining power is kind of paying them, right? Because they want the payment.
They want the everyone wants the money.
Exactly. That's what it all boils down to. So if you tell them, okay, well, I will pay you the $250 to get this removed off my credit report, if you delete it. Paid in full isn't going to help me, and I need to have it permanently deleted. Will you please work with me? Many times they say something like, no, we will mark it paid in full, and that's simply because they don't even realize that that can be done. So it might be a step further.
I didn't know.
Right? A lot of people aren't aware of it, and it boils down to getting not necessarily a manager. Sometimes it could be a lawyer at the firm that just has to sign off on it, because a creditor is obligated to report what they want to. They're not required to report a collection. So one important thing that I always talk to people and coach them about is, you can tell the creditor, yes, you are, obligated. You're not obligated to report that collection. You can, but it's up to you whether or not you want to report it or whether you want to remove it. So if they agree to then remove it, then I would say, yeah, pay it. And then what'll happen is, let's just say that collection made your score drop 50 points. On average, your score is going to go from one collection being removed up 50 points.
Oh, wow, that big of a difference.
Yes.
Wow.
So sometimes that can be, believe it or not, that's the first thing I look for when I'm working with someone and we're trying to do some just credit rebuilding, credit coaching. I'll look for collections, because that's going to be the fastest way that we can get your score up. And then what actually will happen next is, once you get that collection deleted, they typically will notify the 3 bureaus. So I mean the credit bureaus: TransUnion, Equifax, and Experian.
Right, the 3.
And usually that takes about 30 days or so for them to notify them and for it to fall off. However, most lenders have the ability to do something called a rapid rescore, and that's where if we get a letter from said collector stating we are going to be deleting Joe Smith's collection for $250, we're sending it to the bureaus to delete, I can on the back end send that in and have it removed within typically like 48 to 72 hours. I get a new credit report with the new score.
Okay, because a lot of people are so concerned about credit, and then we don't know about it. It's like they always say that, how are you scored? We don't know how you're scored. We just like pray, please let it be a big score. Is it like we have 5 credit cards, 4 credit cards, and all that stuff I've heard, they really keep that quiet. So learning tips to like this, like actually finding out they can take it off. It's like, poof, it's disappeared like magic. It's like wonderful. Because I always thought, they'll say, well, we'll just mark it paid. And didn't know that makes a huge difference.
And then it lingers. It still follows you around for a while. So it's important to know, and that's a great point that you bring up, because a lot of people don't even know what's on their credit or what shape their credit it is in. So I recommend having some sort of credit monitoring service for that. You can always go to myfreecreditreport.com. Anybody's able to go there once a year and get your credit report. And then you're going to know exactly who's reporting what. There's other, Credit Karma is a big popular one nowadays that people like to use. I don't love it for the credit scoring model, because it's not going to always be the same modeling system that a lender. So all lenders and banks, whether it's a car loan, a credit card, whatever it may be, they use different modeling systems, and it's basically how they're coming up with the points, the credit score points. So Credit Karma is going to be a little bit different than most places that are going to lend you money, but I love it, because if at least you have that on your phone or on an app and you know what's on your credit, we're one step ahead by just knowing what's on there.
I thought you were allowed to at least get a free credit report from each bureau. So even if you don't go with one of those places, you can always write them directly, the 3 bureaus, TransUnion, Equifax. You can also write them directly and get your credit report, which I don't even know if most people do, but you need to know what's on your credit, because unfortunately there's a lot of credit fraud, or people steal your identity. And I've had that.
Me too.
That's like, wow, a nightmare. You don't know if you don't get your credit report to find out.
That's right. So as you said, you can definitely request a letter in writing. You can request to the 3 bureaus, or if you go to myfreecreditreport.com, it'll basically compile, and it kind of will go through and ask you, do you want Experian, TransUnion, Equifax, or all 3? And then it is an added service you have to pay to get your score, but that's an option. And not that you have to do that. It's huge just to have that report and know what's on there, because maybe you didn't know about that medical bill, or maybe you moved, or they made a mistake and sent it to the wrong address, and it's been sitting on there, and God forbid it could turn into a judgment, and all of a sudden your wages get garnished because of something you didn't even realize was sitting there.
Or someone took your ID, and then there's that ComEd bill that you had no clue was on there, and it's there in your credit report, and you go to get a car, a mortgage, or anything, and guess you're not getting that car.
And that's the worst way to find out, when you're right there trying to go through the process. So definitely check it out, find out what's on your credit report. That's the first step. And then in regards to trying to keep a good credit score, so what they say as far as like the national average credit score is probably about between a 620 to a 640, I think is where the average is. So really, if you're over a 640, you're like above the national average. Of course, having it in the higher 700s is what's mostly desired by most people, as well as lenders and institutions for lending any kind of money, credit card companies included. But I think once you get into the 600s, you're definitely not far off. And a kind of a good rule of thumb is like 3 accounts. I learned that a really long time ago, that's what is it that they're looking for? What's the magic potion that's going to give you that good credit score? And they say that 3 trade lines, so whether it be a car, a credit card, and a mortgage, or 2 credit cards and a mortgage, but 3 seems to be like that ideal number.
So you mean by trade lines, you mean different things like a car, a credit card, you mean like 2 credit cards? What's the trade line mean?
So a trade line is going to be, like you just said, either a car, a mortgage. So basically every item that is on your credit report is considered a trade line.
Oh, okay. I didn't know. That's why
that's a great question.
I'm sure my audience wants to know too.
Yes, that is such a great question. So 3 is kind of the good rule of thumb. If you can work towards having 3. Sometimes actually when you only have 1 or 2, it's not even enough to compile a credit report for you.
Yeah, I was wondering, did that hurt you too? Like I've heard other people, like I sell homes too, and people will say, well, I have no credit. I'm like, well, bad credit might be better than no credit, I think. You know, obviously not as good as good credit.
Exactly. Yeah, you have to, I feel like you really need to have some credit. There are some ways around it. Some institutions will, work with people non-traditional ways. And what I mean by that is we're going to look at things other than what's just appearing on your credit. And maybe we can verify your rental history. Maybe you rent from a landlord and it's not appearing on your credit. So there are certain things that can even be added to the credit report, like a rental history, car insurance, a cell phone bill. So you could do that, and then you're kind of helping develop credit.
And a lot of people really don't understand either. If you want to even rent, they're going to pull your credit report.
That's right.
Even cell phones, they pull your credit report. If you want that Sprint, Samsung phone or whatever on credit, they're going to run your credit.
They do. Cable, I mean, anything nowadays.
ComEd, you need something, you know. Right.
And to be honest, employers is another big thing.
I've heard that even the employers are running your credit score too. That's not good.
They are, and they'll ask for a letter of explanation, just wanting to know, what has happened in the past and why has that transpired, which is something that we run into. We might need to have that explained as well in the mortgage side of things. So,
I guess it depends on your character. If you get bad credit or financial problems, should you be working in certain fields, possibly could come up.
Exactly. Yep, exactly. That's super important. So we've kind of talked about the collection. So like I said, it's definitely important to try and call and negotiate and get them to delete those collection items. And the trade lines, which are going to be what each individual item that's appearing on your credit, kind of 3 is that magic number. Another common question is getting my credit pulled by a car dealership or a credit card company. Is that going to have a big impact on your credit score? And it will certainly have an impact on your credit score. It kind of depends on what you're doing, though. And the reason I say that is if you go to let's just say one place, you're going to go to one place and this institution, you're going to have just this place run your credit for maybe a car loan. That's going to usually affect it like 4 points. It doesn't drop it quite as much as what people think. But if you go into a car dealership and they're going to run it through every single lender that they work with, now maybe we're talking about 4 points 10 times. Well, that's 40 points right there.
So, I did not know that.
Yeah, so
I thought one place, even if it's a car dealer, they're running it once.
Nope, but each time
they don't tell you that.
No, they do not tell you that. And then months later, you find out, and you're upset, and
your credit went down.
And you probably have the car, but now it's like, oh my goodness, now the next obstacle is overcoming those inquiries, which stay on. So that's an inquiry. Anytime someone pulls your credit, it's considered an inquiry. And that usually is going to follow you for 2 years minimum.
Really?
Yes. So it does take a while for those to come off.
Oh, I didn't know that either.
But you can write. So here's the thing to think about. If you go to the car dealership and maybe you said, I want to buy this car, truck, but you did not necessarily give permission for 10 different companies to pull your credit. If it were me, I'd write to them and say, I did not authorize this credit pull. Can you please delete the inquiry? I have heard of people having success with that. So you'd have to write each individual place, or you could dispute it. So that's something that's becoming super common and I feel like popular nowadays, is people talking about disputing items. So disputing something on your credit is when you're saying, this appeared on my credit, whether you intentionally took out the debt or not, and then you're disputing it. So obviously if you have an instance of identity theft, we're going to dispute that, right? Because you don't want that on your credit. It's important to file a police report, and then it'll even be notated on your credit report, and that's kind of like an added security for you that, hey, this really wasn't me. I incurred some sort of identity theft, and you can add the blurb on there on the credit report. But if you have some other items that you feel that just were flat out wrong, you shouldn't have been charged for, and you dispute the charges, you can dispute any item really on your credit report. So anything from the credit item that's on there to the inquiry.
Oh, I did not know you can actually dispute the inquiries also, because I didn't know at the car dealership. But when you go to buy a car, the salesman is, has your eyes are all bright and everything else. Keys, that's all you're thinking is keys. You don't care if they're running your credit at 100 places or going to the guy down the street,
Exactly. You just want to get out of there in your car.
And you're possibly hit for every lender they go to.
Yep. Wow. Yep. So we see a lot of that. And then the other thing to think about too is anytime you incur a new debt, so if you take out a car loan or a credit card or an installment loan, a mortgage, anything like that, your score will go down. And the reason it goes down is because now you've just opened up all this new debt. And it's basically, usually I should say, a temporary decrease while they figure out, are you a good risk? And then once you make like 6 payments, really 12 is going to be ideal, your score will start rising. A lot of people do notice that. They say, well, I just opened a new credit card and now my score dropped. What the heck? Well, that's because they want to know, now you took out this credit, what are you going to do with it? Are you a good risk? Are you not? So an important thing to think about, is, especially if you're just getting started and really focusing on trying to build your credit, or maybe you've just went through a bankruptcy and you're trying to reestablish yourself in your credit. And if I would say focus, like I said, maybe 1 or 2 credit cards, and you want to keep that balance super, super low.
That's hard to do.
It's
like
so
now they're
hard.
giving college students credit cards. I mean, you just walk down the street, we'll give you this free bag if you sign up for a credit card, and end of 4 years, these kids have like 10 credit cards that are maxed out.
Yep. Yeah, I went through that too. When I turned 18, I made the mistake of, before I got into the field I got into, I made the mistake of doing the same thing, just not educating myself enough and taking out some mall store credit cards and thinking I needed to go shopping, and next thing you know, you're in credit card debt, and then you're paying these monthly minimum payments, and you're like, how am I ever going to get this paid down? Because you don't pay it off, not with paying the minimum. And so a good thing to do then would be focus on one credit card at a time and really just try to stick with that, the lowest balance first, knock that out, and then move on to the next. There's some really great credit cards out there though for either re-establishing credit or for people that have no credit. There's some great credit, and they actually will give you your credit score, some of them, so they kind of help monitor, and then they report as soon as 14 days after getting the card. So that's really good if you're in a situation where you need to build credit maybe quickly, you're renting and your lease will be up in 6 months and you're trying to get a credit established. So there's definitely some good cards out there for that. I would just be careful, and believe it or not, carrying a small balance is like the ideal thing. And by small, I mean like $15 to $25 small.
What?
Yes. So sometimes what happens is people pay it off completely, and then it looks like there is no revolving balance. So it doesn't help you necessarily. But if you keep that really low balance at $15, something small like that, and you're trying to get that score up, that's going to do it. So maybe you get gas, and then that's it for the month. You pay that down to $15, and then you go and do the same thing. And I think another big...
Oh, wow, that's a nice tip.
Yeah,
that is.
So and then just don't carry that card on you, so you don't feel that urge to,
go to the mall and have some fun at the mall. Another question that I run into quite a bit is, okay, I don't want the credit card anymore. Maybe you took out one too many to begin with and you don't want to have them. I'm going to close all of them, and that is not a good idea.
So when you close it, you're actually lowering what's considered your revolving spending limit, and that's going to lower your score more.
Oh, okay.
Because in a way, it's just viewed negatively. They're thinking that you can't handle having this bigger balance to play with, if you will. So you're better off freezing it, sticking it in the freezer, never using it. And if they close it, and by they I mean the creditor, that's fine. It's not going to impact you the way that if you were to call and say, I want to cancel this credit card.
Really?
Yes.
Really? Okay. Because I know I had a credit card in the past, department store. I just got it. It wasn't like I was ever going to really use it. They probably had a bag, and I got to sign up for it and get the free bag. And I was just wondering, it's like eventually they did close it out because I hadn't used it in like 4 or 5 years. And I'm like, does that hurt me or not?
No, that's okay. But if you were to call and say, hey, I'm not really using this, can you please cancel this card? And they won't tell you this. They'll say, okay, they'll probably try to keep you, but they close that. That's going to lower your score. It lowers it quite a bit, unfortunately.
I kind of called them up and begged them to reactivate the card.
Bring that back.
And then I still didn't use it for another 2 years.
Another good thing is if you don't want to freeze it, cut it up. I mean, even if you cut it up and you shred the card and the card's gone, but you it's still in your credit report, if you will, but you're not having that money available to be spending it, it looks as though you still have it open. That's better for you too.
And it shows you're being responsible.
Exactly.
You can handle a $1,000 credit card without having it be $1,010 on the balance.
Exactly. That's exactly right. And you might have to, if you're just starting out and you need to take out, let's just say, a loan for a car, that can be tough, and you might be facing a higher interest rate. And a good thing to think about, though, is there's a lot of places that will refinance car loans. So just to get you started, if you get that car and maybe you have a rate that's definitely making you cringe and you don't want to share what the rate is with anybody, make 12 payments and then go refinance it somewhere else.
And I hate to say it, I didn't even know that one either.
Yeah, a lot of people don't know you can refinance cars.
I thought, okay, I'm fixed at this rate, and we helped our daughter get a car, and she's like, well, I'm going to refinance, Mom. I'm like, you're going to what? You can do that? And she went to her local credit union. She got hers cheaper. I'm like, wow.
That's great.
So I do know that now to pass it on to people, but most people don't think that. You think you're stuck in for 60 months or whatever, that one payment and interest.
That's so true. And it's important for people, especially if you're, like you did, if you're going to co-sign for somebody. It's good to know that, okay, I'll make this deal for you, I'll co-sign, but 12 months and then you're on your own.
Right. Okay. Good.
And the same is true for a mortgage, really. If you have somebody that is co-signing, we really don't have people co-sign for credit. It's more income, but same idea behind it.
Okay. Yeah, so that wonderful information, a lot of information. And it's kind of a sad that I'm actually in that industry in the sense with real estate, and it's like, I didn't know all that stuff. And most people don't.
No, there's not enough education. So this show is so awesome, and the fact that you're getting this out there and sharing it with the public is super important.
I know a lot of kids that go to that college, and then they come out of college 4 years, and they get all the credit card debt, let alone the loan debt from their student loans. Now they may want to go buy a house or rent someplace.
No.
No.
And the thing is the student loan debt can be really huge too, especially if you're looking at a mortgage, because many times when you graduate from school, they're going to defer that student loan debt. And what defer means is, okay, you're just not going to make any payments for a certain period of time, 6 months to 12 months. But as a lender, we have to view that differently because we know those payments are going to kick in. So we actually have to qualify people with like a 1% of what that student loan amount is. So that's something important to know when you're getting into it, just what your plan is. You don't want to just have a knee-jerk reaction. You want to think it all through as far as your credit's concerned, down from the credit cards to student loans.
And that's what I'm really hoping that a lot of the younger people can look at. Not like us old people really know, but we still need to know this information. We should know better. But it'd be nice that the younger people actually can start off on a better foot than we did.
Absolutely.
Got to learn to do this and do it right.
Yes.
Definitely get the credit going, the finances, make sure you have savings in the bank, then your credit in line, because it's going to affect you all around.
It will. It follows you for a very long time.
Right. Now, when it comes to credit, should people carry, you said don't carry a large balance at all.
Well, the key to that is you don't ever want to go over like 30%. And that can be hard to do depending on what you were approved for. But you want to keep that, if you have to use it and you're going to go above my $15 to $30 balance requirement that I say is what you should have, 30% is a good idea to keep it under 30%. So $300, let's just say you went out and you got approved for your first $300 card. Try super hard to never let it go over $90. And if it does, it's going to negatively hurt you. But if you keep it under that mark, you'll be very happy.
Because I'm assuming like when you have the credit cards, so if you have a credit card, several credit cards, plus a card payment, that's all going to affect your credit power even in buying a house later on, even renting or rent options. Those are all going to affect everything, I assume.
It will. That we'll talk about, I'm sure, in another segment, but that'll go into what's referred to as your debt to income ratio. And that's looked at by all lenders, whether it's a credit card, car loan, anything as well.
Right. Okay. Now, even with we're almost done. We only have a couple more minutes left. Even with like getting cars, is it better like that going through? I know you said they may actually run you through 10 different loans. Is it better to just tell them, no, I only want a couple, or run it with one, or go to some place like a bank or a credit union that they know you're established, and go with them for financing so you don't have to worry about it hitting your credit a whole bunch?
That is such a great question, and I absolutely recommend you do that. I'm a huge fan of credit unions, but I think if you go and get pre-approved, just like if you were buying a home, a lot of people don't know you can get pre-approved for a car loan. And then you're almost walking in like a cash buyer.
Okay.
So then they can't run your credit. Say, you don't need to do that. I already have that taken care of.
Wow. Yeah, I wish I'd known that like the last car. Okay, well, thank you very much. Unfortunately, we're all out of time.
Thank you for having me.
Thank you, Susan. You're at NuMark. You're a senior mortgage consultant, and you've just provided us with so much wonderful information. I appreciate that. Thank you again. I hope this was very informative. Get your credit together, get savings in the bank, because credit, unfortunately, it goes with each individual person, and it affects us, our buying power, what we can do with it. This is Why and Why Not with Janice. See us on Facebook, YouTube. Our website is YWHYNOT. And thank you very much, and see you next time. Bye-bye.